Named after the 1937 airship disaster, the Hindenburg report looks for stocks that could crash. Hindenburg, a short seller investment firm, is shorting Indian Adani Group. Before moving to Adani controversy, let's decipher what shorting is and how it works. Let's say that you have decided that company XYZ, which trades for $100 per share, is overpriced. So you decide to short the stocks by borrowing 10 shares from someone who owns them and selling them for a total of $1,000. If the stock proceeds to go down to $90, you can buy these shares back for $900, return them to the person you borrowed them from, and keep the $100 profit to yourself. And that's what Hindenburg precisely do. Most investors own stocks, funds, and other investments that they want to see rise in value. The stock market can fluctuate dramatically over a short-term period. But over the long term, it has a clear upward bias. For long-term investors, owning stocks has been a much better bet than short selling the entire stock market. Shorting, if used at all, is best suited as a short-term profit strategy. Sometimes you'll find an investment that you are convinced will drop in the short term, in this case, the Adani Group. In those cases, short selling can be a way to profit from the misfortunes that a company is experiencing. Now, the Hindenburg report claimed that the Adani Group was the biggest con in the corporate history, engaged in brazen stock market manipulations and accounting fraud schemes. It also accused Adani of loading companies with debt that has put the entire group on a precariously financial footing. Hindenburg disclosed that it took a short position in Adani companies before it published its report. Basically, Hindenburg would profit if the Adani stocks fall. Activist funds like Hindenburg use financial instruments to profit from falling share prices in the companies they target, which they believe are heavily overvalued and have poor or fraudulent business practices. Famed investor Michael Burry has shorted Tesla stocks. Hindenburg's allegations have wiped billions of dollars of value from the sprawling empire of Gautam Adani, who was world's third richest man until more than $22 billion were erased from his personal net worth in the fallout from the report. The Indian industrialist is now world's seventh richest. Many of the Adani associated entities have had no obvious sign of operations, including no reporting employees, no independent addresses or phone numbers, and no meaningful online presence. Despite this, they have collectively moved billions of dollars into Indian Adani publicly listed and private entities, often without required disclosure of the related party nature of the deals. 13 websites were created for Adani associated entities. Many were suspiciously formed on the same days, featuring only stock photos, naming no actual employees and listing the same set of nonsensical services such as consumption abroad and commercial presence. Money is moved to and from private companies onto the listed companies' balance sheet to make them look financially healthy. Large amount of Adani shares are held in corporate shell based in Mauritius and elsewhere, where owners hide behind the nominee directors. And that's what the Hindenburg is ready to bet up against.